please join me in welcoming Zac White. How's it going, man?
All right, thanks, Shane. I don't know about the coding legend. That's Jeremy's job. So I'm okay. I can hold my ground, but Jeremy's definitely the coding legend. He's the guy who came up
I'm
with
not
all
going to tell him you said that.
this software, but I appreciate it. So,
Cool, man. Well, looking forward to the presentation. You can go ahead and take her over, man. Go ahead and share your screen.
all right, thanks. Yeah, we're gonna dive into some deep details here of how backtesting works. So let's get my screen sharing going, and let's see. There we go. All right, so everything should be switched over here, guys.
Yep, looking
Um,
good, man. She's
yeah.
all yours.
All right. So of course, the quick disclaimer, but of course, this is an educational, so we're not really going to cover any trading stuff here, but just habit, including that in there. So, all right. So as the title, says, this is going to be an advanced back testing workshop here. And so I'm going to go over the, technical details of how order fills, are determined, or calculated by your trading platform, right? Now, I'm most familiar with NinjaTrader, but what we're going to talk about here is basically it's the same concepts across all trading platforms. So if you're using multi-charts, TradeStation, what is it, MetaTrader, none of them really have any edge on top of the others. So when so when you do some back testing, they're all following the same kind of guidelines there, because there really is no other kind of solution, for figuring out, where those order fills, get calculated at. So, um, right. So the first thing is, if you're new to trading, or just kind of new to trying to automate, some of your stuff to try and get some backtest results here, how do you get your platform, your trading platform, to provide you with backtest results? Well, you need to create a strategy, right? So all trading platforms have a class called a strategy, right? And the strategy class, we'll get into more detail here, but the strategy class basically manages orders, right? Whereas indicators, everybody's familiar with indicators like the MACD and stochastics. The indicator class, well, I'm kind of getting ahead of myself, but the indicator class, simply put, just it does mathematical and probability calculations, right? So if you want to do backtest results, you have to create a strategy so that you can submit orders, to the platform, and then the platform can calculate, whether that trade was a win or a loss, right? And typically, creating a strategy typically means you have to learn to program. You have to code one up. So there are a few platforms out there, where they have a tool, so you don't have to learn to code. You can create a strategy, by clicking and pointing and stuff like that within this tool, right? And we'll kind of cover that quickly as well. So, right. So a strategy is what's needed here. So now that's going to take kind of like a broad, higher level overview, of the various components, that go into a strategy, so that you can then generate your backtest results. So, the first thing you start with, when you have a trading idea that you want to backtest, right? First thing you start with is the indicators, right? The indicators. And indicators, and I'm going into detail because later on, you'll kind of realize that I'll kind of explain once we see everything here, that a lot of new people get confused, why things are separated between indicators and strategies, right? So the indicator class is basically a very simple mathematical functional class. It's specifically designed to just do math, or various tasks, such as, identifying patterns. So maybe your charting platform has a candlestick pattern indicator, so you can tell, that indicator to look for, was it three black crows, Japanese candlestick pattern, right? Or dojis, or shooting star, Japanese candlestick patterns. Um, you know, also, common indicators that people use in their strategies, the ADX, which specifically is designed to try and tell you, a directional bias in the market, the RSI to tell you the strength of that bias, or that trend direction, and of course there's momentum indicators, support resistance type indicators like your pivot indicators, your VWAP lines, things like that, support resistance lines. And if you're a discretionary trader, you're probably using like daily and or weekly high and low prices, right? So indicators are basically, the basis of all kind of trading ideas. All right, so you start with your indicators, and then you with your indicators you basically build a logic or a pattern kind of in the engine, right? That logic engine is, its purpose is to create entry, and or exit signals, right? So once you have your indicators, and your kind of your logic put together for the entry and exit signals, well, then that gets incorporated into the strategy. And so the strategy, right, it's reading those entry and exit signals. And so here's the key point of why we need a strategy. So a common question is, well, why isn't the indicator doing all that stuff? Well, for whatever reason, well, there are some good reasons, but just to kind of keep it simple, strategies are in their own class because they manage orders, right? So there's a lot of extra overhead in a strategy that doesn't occur in an indicator, right? Indicators are designed to run very as fast as possible and as cleanly as possible. But with a strategy, because they're designed to manage orders, there's this extra layer of overhead, required to keep track of those orders and manage those orders, so that way your strategy, can determine, if it's submitted 10 orders, how many orders are left, how many profit targets or stop losses got hit, things like that. Yeah, so this various, order management type of overhead is necessary in a strategy. Um, so the key thing to know about strategies, right, is it submits orders to be back tested, right? So that's how you get your backtest results, is the strategy will submit, and this will be historical orders, right? Because you're backtesting on historical data, right? So therefore, there'll be historical orders. And a key point that I want to make, because this is another common misunderstanding, that it's the charting platform that is calculating the profit and loss of the backtest results. So a lot of people think the strategy is calculating those backtest results, and they'll say, hey, this strategy is, it's got wrong backtest results. Well, when you create a strategy, you're not creating the code that calculates the profit and loss. That is all built into the charting platform, right? So the strategy, all it does is it says, hey, buy 10 contracts at this price, and it submits it to the charting platform. And so the platform goes, okay, you want to buy at this price. And so the charting platform knows your entry price, and then your strategy, if it submits a target or a stop loss, then the charting platform is going to know if that target or stop loss was hit, right? And so the charting platform is tracking the entry price, and it is tracking the exit price. And from that, right, you can then easily calculate whether it was, a profit or a loss for that individual trade. So again, the strategy is not tracking the entry and exit prices to calculate the P&L. it's the charting platform itself. So, and then some other things, that strategies do, as mentioned, they strategies, do order management, such as a trailing stop loss. Yeah, a trailing stop loss is actually order management. You know, your code, you have to have some logic that determines, when to trail that stop loss. When does the stop loss trailing occur? And you have to track whether the market, moves higher so that your stop loss can then trail higher, right? Um, and then, of course, you can also program in or add in, some risk and money management into your strategy there. All right. So I just want to, again, emphasize that, your indicators are in an indicator class, and this is kind of more of a programming terminology, but it's in an indicator class that for the most part, indicators don't have any access or any knowledge of orders, right? Now, the lines are kind of becoming blurred these days, especially with NinjaTrader 8. Technically, indicators now do have access to orders, but the indicator class is missing a whole lot of extra kind of built-in functionality, for um, for knowing the state of those orders and things like that, right? So the strategy class still is really uh, mandatory for doing backtest results, right? So again, the indicator class is just supposed to be a clean mathematical class for doing simple mathematical functions. And the strategy class, is what has all that overhead layer of software to track and manage orders and things like that, right? And so that, kind of comes into play, as mentioned, a lot of people ask when they learn about Blackbird, well, why isn't, all the logic engine, and the entry signals, everything, why isn't it built into Blackbird? Well, that's because, that's just how the charting platforms separated things out, the indicator class and strategy class, Um, and as mentioned earlier, right, nowadays, there are ways to create a strategy without having to learn to program. So, one of them is Blackbird. And I'm sure there's probably some other strategies out there as well that are kind of point and click, but also NinjaTrader has a built-in strategy builder. And I don't know of any other uh, charting platforms that have something like a strategy builder. So if any of you guys are out there listening, are using other charting platforms, if you know of any that have something like a strategy builder, if you could put that into the Q&A, then we'll mention that later on. So if you don't want to have to learn, if you don't want to learn to program, NinjaTrader has a strategy builder built in, and it's just point and click, point and click. So you can bring in your indicators and you can build some simple, logic or, and pattern, entry and exit signals, and build a strategy so you can get some backtest results. All right, so now let's take a look, at what's involved in running a strategy. And again, this is pretty similar across all charting platforms, but what I'm going to be showing you is NinjaTrader here. So the first thing you need to do is you need to be, connected to a data feed to run a strategy here. And then second thing is we need to open up the strategy class. And what I'm going to demonstrate is the simple MA crossover. It's a basic, learning tool from NinjaTrader here, just kind of show you the simple basics of building a strategy, right? And so this simple moving average crossover submits market orders, right? So so let me add that down here, and you do need to enable. So there's this extra step when you're turning on a strategy, you do need to consciously enable it. It's kind of a safety feature there, just in case, you have your platform all set up to trade live and everything. You don't want to accidentally turn on a strategy and have it start trading live there. So there's this safety feature here to make sure that you're consciously enabling that strategy. So, all right, and I'm going to put in 10 contracts here just to kind of illustrate a problem, that we'll get into later on here. So, right, so once you get everything set up here, um, then you can just click OK. And there you go. Fairly quickly, you'll see the back test, the entry and exit points on your chart, and you'll see, the back testing, visually on your chart. And if you want to see the results, well, within NinjaTrader, you can right click on the chart and then go to strategy performance, right? So you'll see the strategy performance, it's coming from NinjaTrader. It's not coming from the strategy, right? I'm not going into the strategy window. I'm going into the strategy performance window, which is, comes from NinjaTrader. And then we could take a look at the historical backtest results, right? So that's really the simple, straightforward, you know, um, the short version of, generating backtest results. And it just so happens this crossover system made 15 grand within, this is like a 5-day period here. So don't take this as a winning system. Anybody with any experience knows moving average crossovers never succeed. They're always losers. So so I would just kind of ignore this. But the purpose is just to see that this is how you go about getting those backtest results. Like so. All right. So the point of this is to illustrate kind of the pitfalls of backtesting market orders here. So let's see here. If I scroll back, yeah. So right here, I've circled one in particular that we're going to focus on here. And it kind of really illustrates a good point here, right? So you can see the system took a long trade, right? So the green line, this green line is basically connecting the entry point and the exit point, for each entry and exit. So, and being a crossover system, right, it's always in the market. It's what's called an always in the market system, right? So it's either buying or selling, and it's never flat. So we have a buy back here, and then it's reversing to a sell here. So to reverse the position, to reverse the buy or the long position into a short, it has to close the long position. So 10 contracts to close it. And then it has to sell short 10 contracts to then go short 10 contracts. And you can see that, right, both the exit and the entry all takes place at the open of the bar, right? At the open of the bar there. So, 20 contracts at that one price, the ES can probably handle 20 contracts all at one price, but other instruments that are traded a little more thinly, you're probably going to get some slippage, trying to push 20 contracts out into the market. But of course, the charting platform doesn't have all that information that it needs to know exactly where your market orders are going to get filled, right? So, so it's going to take a look at, what is needed to know where a market order does get filled, right? So in order to properly backtest a market order, you need historical bid or ask and bid data, right? You need to know where that ask and bid price was along with the volume in order to accurately know where a market order gets filled, right? If you're trading live, then you know that your market orders, get filled at the ask if you're going long, or your market orders get filled at the bid if you're going short, right? So, so this is a little screenshot here of that chart that we were just looking at here, and I imposed some fictitious ask and bid prices on here just to kind of illustrate a point here, right? So if you're going short, so we're basically selling 20 contracts, right? So those are all going to get filled at the bid, right? And if the bid volume gets filled at this price, right, then you know, the remaining contracts, they're going to get filled a little bit lower, right? They're going to take up the bid price, the next tick down. All right. So if the bid truly is, or was, I should say, because this is all historical, right? So if the bid was at the open price, then this back test, or this price here for the back test is fairly accurate, right? It's going to be fairly accurate if the bid truly was sitting there and the ask was up above, right? Now, on the other hand, what if the ask was sitting at the open of that bar? Well, and the bid was down here, right? And I just used a simple two-tick spread, right? With this being the ES, a two-tick spread, that's fairly common there. Maybe even a one-tick spread for the ES because it does have a lot of liquidity. But, but a lot of other markets, they're going to have probably on average a two-tick spread, right? So this is a two-tick spread. So, so if the ask is up here at the open, well, when you're selling at the market, you're going to get filled down here at the bid. And that's a two-tick difference, right? So your P&L is off by 2 ticks. And, and that can add up, right? When you're back testing, 1,000, 1,000 trades, 1,000 trades, times 20 contracts, times 2 ticks, that's a lot of P&L that's not accounted for. So, right. So therefore, this fill price, this back test fill price is totally wrong, totally incorrect. It would need to be, down here where the bid truly is, right? So this kind of illustrates, one of the missing elements and assumptions that are being made when you're back testing a market order fill there, right? So you just don't know where that bid and ask data is, and I don't know of any charting platforms out there that actually store the historical, bid and ask data, for back testing. As far as I know, there aren't any platforms out there that do that yet, right? But once, as charting platforms evolve, computers get faster, our internet connections get faster and everything, it's only a matter of time before charting platforms, are able to start storing that historical bid and ask data, so then that way, back testing will be a lot more accurate than it currently is. All right, yeah. So one thing to kind of remember here, we're going to get back to this, is that, with a market order, trading platforms assume that the bar open price is where your market order gets filled at, right? So this open price is critical. We're gonna get back to that here in just a moment. So, all right. So now let's look at back testing a strategy that uses limit orders, right? Using limit orders. So that was market orders. So let me pull up my other chart, and there we go. All right, so here's my other chart, and I'm going to put on a different strategy that was built to submit limit orders instead of market orders. They're limit orders. All right, so let's just get that enabled. And again, let's put in 10 contracts there. And also, I'm going to turn off the exit on session close as well. So, all right, so let's get this up and running. So again, right, we see our backtest results there on the chart. And let's see, somewhere along here, I have a little place I wanted to focus on. Yep, here we go. All right, let's stretch this out so we can focus in on here. Right. So I also added to this strategy arrows. You see the green arrows, the 2 green arrows and the 2 red arrows, right? That helps us visually see where a long crossover and a short crossover occurred. Remember, this is still a crossover system here, right? And we'll kind of get to this in just a moment here. So, but what I want to point out here is that in order for a limit order to be considered filled, price needs to tick through your limit order. All right. So I made some adjustments to this strategy, to the limit order price. So what's happening here is, right, on the bar that we get the crossover signal. So what we do is we take the closing price of that bar and we subtract a tick, right? So if it's a short crossover, we take the close of the bar and subtract a tick, right? So we're trying to get in, we're submitting that limit order and trying to get in at 1 tick better price, right? So here we go. So we can see that, it was filled 1 tick higher than the close of the bar. And again, what we want to look at is that this limit order was filled because price ticked through it, right? We can see that there's a tail here that goes, that punches through our limit order to go short, right? And same thing over here, right? So this is the long crossover bar here. So our crossover signals occurs on this up bar, right? And so where my cursor's at, that's the close of the bar. And so to go long, I placed a limit order 1 tick below, right? So 1 tick better price. And we can see, it's kind of hard to see that blue on red, but right there, is where that limit order was filled, 1 tick below the close of the signal bar, right? So that's the closing price and 1 tick below it. And again, right, this down bar, obviously it ticked through our limit order, so it got filled up, right? So let's kind of scroll forward here, right? So look here again, those green arrows. So this is why I put those green arrows, right? And you notice if you look at the entry and exit lines, right, it totally skipped over this crossover. So what happened here, right? We have a long crossover. So, why didn't the strategy, go long? Well, again, if you take the close of the bar and then subtract a tick, to go long, subtract a tick lower, right? That white line illustrates where that limit order was sitting. And we can, so on this one, we can see that price never even came down, right? There was no pullback in price. So that limit order was just, price just took off without that order. All right, so that one's obvious, as to what happened there, right? And again, this is a short trade. So, a short signal is just going to be ignored because we're already in a short trade. And so here's the next long crossover. So you take the close of the bar, subtract a tick, and right there is our limit order to go long. And, it was filled. So we can see that by that wick, right, price went through the limit order by 1 tick. And so therefore, that limit order was considered filled in our backtest results there, right? And so let's see here. So we have a short crossover. So the system is now short. And let's keep scrolling forward here. And here we go. So, right, so here's that trade line, the red dots, right, for the short trade, right? So the strategy is currently, in a short position. And so we get a long crossover. So again, we take the close of the bar and subtract a tick. So where that white dashed line is, that's where the limit order is resting to get filled. And we can see price touches it. It touches it for several bars. But in the back testing, it's not considered as getting filled because price did not punch through or penetrate through that limit order by at least 1 tick, right? So this is, so another assumption, is being made here by the trading platforms because that bid and ask volume is missing. Also, the price is missing too. So we don't know, so if this is a long trade, right, the ask is going to fill your limit order. So we don't know if the ask price got down here or not, or if it was only the bid price got down there, right? So there's kind of, 2 issues going on here. Plus, we don't know what the volume is, of that. But if price punches through your limit order, right, then you are guaranteed to get filled, right? That's one of the guarantees that the exchange will make or does make with a limit order, that if price does punch through that limit order, you're guaranteed to get filled at that price, at your limit order price, or maybe even get filled at a better price, So if we're buying to go long, the exchanges are going to guarantee that we're going to get filled here at 43.1950 or better. So depending on where the bid and ask price goes, if the market dipped a little lower, you might get filled a tick or two lower on a couple of your contracts, right? But since price never penetrated that limit order, the back test doesn't consider it as being filled, right? And let's see here. I think I have some others. I didn't mark this one up, but again, here is our long signal. And so our limit order would be down here where my cursor is, 1 tick lower, right? Let's see here. I can, draw a little line here. Right? So our limit order would be resting down here. And of course, the market just never got down there. So that's probably why I didn't mark that one. And all right, and here finally, we get a long cross up. Our limit order is resting right here, right? 1 tick below the close. And this bar here, let me draw another white line here. So our limit order is sitting right there, right? And this bar touches it, but doesn't fill it, right? It's not until the next bar that we actually get a fill right there, right? All right, so let's go back to the PowerPoint here and kind of look at the details of this. All right, or kind of take a summary here, right? So for a limit order, to be considered filled, because the bid and ask data is missing, and most notably for limit orders, the volume is missing. So, so since the volume is missing, the platform doesn't know if there's enough volume to fill your limit order, you know, when uh, when price touches your limit order. So therefore, a conservative approach is made in your back testing or in the back testing results. The conservative approach is price has to penetrate through your limit order in order to consider it as being filled. All right. Um, so there, yeah, just a little summary there. So trading platforms assume price must penetrate through to be filled. All right. All right. Now, um, some let's kind of talk about some charts here that are notoriously inaccurate when back testing. Right. So charts that do not back test correctly. So Renko charts, Unirenko, or any other kind of hybrid Renko chart does not backtest correctly. And we'll kind of go into why that is here in just a moment. Line breaks, Heikin-Ashi. Heikin-Ashi is probably the worst one because Heikin-Ashi smooths everything out. Heikin-Ashi can be way off the actual market price there. Um, so and I make mention of that because there are a lot of traders that like the smoothness of a Heikin-Ashi. They do look pretty on the chart, just like Renko charts. Renkos look really pretty on the chart too. They kind of smooth out the market movement for sure. But again, back testing, notoriously inaccurate. And then there's Kagi and point and figure. So two other kind of weird chart styles. So what do all of these bar types or chart styles or charts have in common? They have a modified open price, right? So as we illustrated with market orders, market order fills are are dependent on the open of the bar. So if you're modifying the open price, well, then you're going to be skewing your back test results, right? Also, a lot of these bars are missing wicks as well. So without the wicks on the bar, then the charting platform isn't able to determine if your profit target or your stop loss was filled by a wick, right? Yeah, so if a high wick, if you're going long and there's a missing high wick here, so let's kind of take a look at this chart here, right? So if you're trading the Renkos and you have a profit target up here, well, this wick, could have filled your profit target before the bar reversed and hit your stop loss, right? So that's that's kind of another key element that's needed for properly back testing is having the wicks on those bars here, right? And this little chart shot here, just kind of illustrates these hybrid Renkos here, where the open price is severely modified here, right? So if the bar closes up here, then how you got to ask yourself, how does the open price get down here? How does the bar close, and then the open price suddenly appear several ticks lower, and then the bar closes up here, and then the open price is several ticks lower, right? So you can see that if you're back testing market orders and you're getting filled way down here at the bottom of all these bars, right? You're getting all of those extra ticks in profit in that backtest result, right? So yeah, so it's pretty hard to build a strategy on Renko charts that loses money, because you have this modified open price. Any kind of backtest that you run on a hybrid Renko chart almost always makes a profit. because every trade, it has built in, so many extra ticks of profit, because the open price is being used as the entry, where in reality, the market is trading up here where the bar is closing. So in reality, you're getting filled way up here. You're not getting filled down here. So, and let's see. All right. Well, I was a little worried I was going to get really close here, but it looks like, I've got about 15 extra minutes here to answer some Q&A. So we were able to kind of run through this fairly quickly here. So let me see. Yeah, if there's any questions here. So yeah, all right. So I see
Yeah, we've got one from Aziv that was wondering if you could discuss how to test a specific strategy across a number of different stocks. Not sure if you got time to go into that or not.
Yeah, sure. Well, it depends on your trading platform, obviously. So, I have NinjaTrader. And so what NinjaTrader would use to backtest a portfolio, right? So that's what, I think most of these platforms would call it, like a portfolio of different stocks or different instruments. And they have what's called a strategy analyzer. And there are training videos from NinjaTrader on their strategy analyzer. So you could probably just do a Google search for, strategy analyzer, training video, and that'll bring up, an actual training video from NinjaTrader, support personnel, on how you backtest a portfolio here of stocks. And let's see, it's been so long here. Let's see. Oh, there we go. Yeah. Let's see. It's going to be in the data series. There we go. Yeah, they kind of moved it. So, um, I'm still remembering that NinjaTrader 7 days where you would pick your portfolio over here on the left, but now you go into the data series over here, and I believe you can just kind of like if you wanted to back test the S&P 500 there. Let's see if you might have to create your own custom list here. Let's see, indexes. Oh, there we go. All right, so if I go to S&P 500, there's select all. So I can select all of those stocks. And now we can see the instrument says S&P 500, right? So that's selected all the stocks in the S&P 500. So if you only want to backtest certain stocks, you'll need to create your own custom list here, right within the, let's see, what does NinjaTrader call this? The data series manager. Yeah, within the data series manager, you can create your own custom list and select that custom list there. And so the strategy analyzer will backtest all of those instruments using, whatever system, you want to pick here. So if we wanted to backtest, that sample moving average crossover, like so, right? So yeah, there you go. All right, let's see what other questions we have here.
Yep, sorry about that. I was typing out an answer to another one. Let's see here. Does Blackbird allow for optimizing position size during a backtest?
Yes, it does. Yep, it will. Yeah, during the historical backtest, Yeah. So what Blackbird, so the way that your, you know, position sizing is calculated. Let's see. I don't really, yeah, I don't have anything to illustrate with, but well, actually, yeah. Let me use some. Let me use some simple lines here, right? So let's say that's our entry price, and then a stop loss is going to go in down here, right? So your risk is the difference from your entry price to your stop loss, and so that can be calculated historically. And so once you know what your risk is, then you can easily calculate the position size, so yeah, so Blackbird can do that historically.
Cool.
All right.
Let's see here. We've got Rolex RSP wanting to know how reliable is high order fill within Ninja Trader and backtesting.
Yeah, boy, these are some really good detailed questions I was not prepared for. So, although I did do some preparation here. So
Hey,
what?
at least you understand it. Some of these are going over my head because I'm.
Yeah, I did actually have to crack open Ninja Trader's documentation here to do some research in preparation for this. So, yeah. So what? Let's see. So what Rolex is talking about here is, let's go into the strategy and open this up here. And yeah, you'll notice this is one thing about Ninja Trader is when a strategy is enabled, everything, all the settings are disabled. So you're not allowed to adjust your strategy on the fly, right? So you do need to disable your strategy like so. And now we can go in and play around with the settings. So what Rolex is talking about is let's see here, where, oh, there, right here, high. So order fill resolution, set to high. And so what that does is you can see this new option, this new option here, minute, 1 minute, a 1 minute chart option opened up, right? So let's look, let me turn this off again, right? So standard fast back testing, so with the standard fast back testing is it back tests using, your chart data. So this is a 1 minute chart. So standard is going to be back tested against 1 minute bars. So if I wanted higher resolution, and the reason why you want high resolution is, what if you get into a trade and you have a really long bar like this, right? A really long bar. And that bar is so long that it touches your profit target and it touches your stop loss, all within the same bar. How does the platform know which one got hit first? Did price move up and hit your profit target? And then it pulled back, to where your stop loss would have been, but your profit target got hit first. So, so as a solution, to this back testing problem, you know, NinjaTrader 8 came out with this order resolution. So if I'm back testing on a 1 minute chart, what I can do is I can actually tell NinjaTrader back test my trades on a 1 tick chart, right? So on a 1 tick chart, now NinjaTrader has a 1 tick chart. So NinjaTrader can see, where exactly, the market was moving that built this 1 minute bar. Did the market move up first, by just following the 1 tick data? Did the market move up and hit my profit target first? Or did the market pull back and hit my stop loss first and then move up? So this high resolution here does add a lot more accuracy. But again, it is subject, to, those limitations that I explained with market orders and limit orders. Again, even though this is a 1 tick chart, so we can tell, internally inside this 1 minute bar, NinjaTrader can tell if the market came down first and then went up, or went up first and then came down. But as far as the fill, so if your stop loss got hit, stop losses are notorious for getting 1 or 2 ticks of slippage, depending on the volume. And that, again, that bid and ask data is missing. So NinjaTrader will fill your stop, at that stop loss price. No slippage will be accounted for, right? So at least, at least with this, NinjaTrader can confidently say, okay, your profit target did actually get hit first, as opposed to your stop loss getting hit first. Without this high resolution, if you do a standard back test, NinjaTrader is going to take a conservative approach, and it's always going to say your stop loss got hit first and your profit target did not get hit, right? It's going to take that conservative approach. So with the high fill resolution, NinjaTrader can now figure out where the market went inside that bar. Again, if you're using a 1-tick data series there, or, maybe, using something like a 10-second, resolution, also might give you that same information, and that'll speed up the back testing as well. Trying to sort through 1-tick data, on the ES is going to be very time consuming. Just a mental note there. A 1-tick back test is going to be super time consuming, as opposed to just, breaking that 1-minute bar up, into several pieces, so maybe a 5-second bar, so you have, little segments, and that'll backtest a lot faster than a 1-tick chart would. So, all right. Yeah, so that was a good question. So what's the accuracy? Again, just to summarize, it's still missing that historical bid and ask data, so you're not gonna, so that backtest is not going to include any slippage, due to, if you are trading 10 contracts, was there enough volume there, or did you get a couple of ticks of slippage, because you're trading too many contracts. So, all right.
Yeah, cool. Looking like that's about it for the questions, unless you guys we have a little bit of time left, folks. If you want to type something in and ask Zac, now's your chance.
All right. Yeah, we got 5 more minutes left here, guys. If anybody else has any questions.
Hey, how long does it take you to haul all your equipment down to the beach and do your recording?
Yeah, it was actually getting the extension cords out there was a hard.
It looks nice there, man.
Right. Well, that looks a lot prettier than my office does. That's for sure.
Hey, man, you look at mine. It's always cold in the vacuum of space.
Yeah.
All right, man. Well, I think that's probably going to be a wrap. Thank you again, Zac, for being here. Really appreciate it, man. Sharing your expertise and your knowledge.
Good. Yeah. Hopefully this will clear up a lot of questions that, new traders have when they're getting into, kind of automation or semi-automation, and trying to prove out their ideas. So for sure.
Oh, looks like we got maybe one more here. Does Blackbird backtest more accurately than Raven?
Oh, okay. Yeah, I think I understand what Island Dog is getting at. So let's see what he is asking. And so, no, they're both going to backtest the same accuracy, because again, the entry and exit prices are determined by the charting platform, right? So, again, the strategy only submits the orders to the platform, and the platform tries to figure out, what price your entry got filled at and what price your exit got filled at, right? So as far as, the technicals of the exact prices of where you got in and out, that's going to be the same between Blackbird or Raven. Now, as far as the differences between those two strategies, Raven is very simplistic. So with Raven, if I throw Raven on here, so with Raven, you can submit one order set. So you just have a simple profit target and a simple stop loss. You can trail that stop loss, but it's a fixed trail, so you can't do any kind of break even, with the stop loss or anything like that. So from the functionality standpoint, Raven, you can see is pretty limited in its backtest capabilities. So, so obviously that could, introduce not inaccuracies, but just limitations as to, backtesting your system. Whereas Blackbird, Blackbird, you can put in really advanced trailing stop losses and advanced profit targets as well. Your profit targets can move around, based on indicator conditions and things like that. So your ability to control your profit target and stop loss, from that standpoint, you could say that'll give you a more accurate, back test versus Ravens, simple, place it and forget it type of capability, you know. So,
As a
all
follow-up
right.
to that, he also asked if you can run ATM results.
Can you run? No, NinjaTrader still cannot backtest ATMs. Yeah, that's a good point there. Um, yeah, so let's see here. NinjaTrader includes this sample ATM strategy, and yeah, if you try and backtest that, it's not going to work. Um, yeah, NinjaTrader has yet to be able to backtest their own ATM strategy there, so that's not possible. So once NinjaTrader figures a solution to backtesting their own ATM, yeah, then you'll be able to backtest ATMs within Raven. So yeah, so what Eziv is talking about here is in the trade management section here. Let me kind of close all this stuff out so we can focus on what's necessary here, right? So in the managed trades using, Raven can submit an ATM so that in live forward testing, you can test an ATM, but you can't back test an ATM. So that's just a limitation with NinjaTrader, right? So there's the two different options that you have within Raven is you can just type in, a fixed, profit target and stop loss, you know, or if you're forward testing using the market replay, then you can back test an ATM if you are using, so let me go to my connections. If you're using the playback connection there, that playback, simulates live forward testing. So since it's a simulation, that's how you can back test an ATM type of strategy system. So, all right, let's see. It looks like we have some others here. So Rolex. So what is the right way to backtest with NinjaTrader? Prefer market replay versus strategy analyzer? Right, good question. So if you want truly accurate backtest results, you're forced to use the playback connection. So thankfully, the playback connection data includes that bid and ask data that's missing, right? So when you have static bars, right? So this 1 minute chart, it's what I call a static, chart, because historically it's not going to change. So this static chart, right, is missing bid and ask data, right? So that's where all this, this limitation comes from. So, but, when you go into, let's see, historical data. So if we bring up the historical data manager, this allows you to download market replay data. Let's see, load. Sorry, I want to go to the load tab. And then right here is get market replay data. And this, yeah, so when you download that replay data, it does include the bid and ask prices and volume. It includes the level 1 volume there. So it is a little limited, because you're missing the level 2 data. So again, if you're trying to throw 50 contracts, at the playback connection, you're it's not gonna give you the true slippage that you would encounter, if you're throwing a massive amount of contracts at the market there. But if you're just, back testing, again, I guess you have to know your instrument, right? So if you're back testing against the ES, which is probably the most liquid futures contract out there, you could throw 20 contracts at it, no problem. And it'll just, gobble it up like it was an M&M, no big deal. So, but if you try and throw, 20 contracts at like the YM, that's a lot thinner. You're probably going to encounter several ticks of slippage trying to fill all 20 contracts there. So know your instrument and know what the average volume is at the level 1 bid and ask, to kind of get a gut feel, for what slippage is not being accounted for with the playback connection. All right. So yeah, another good detailed question there. All right. So yeah, Island is now asking, can Blackbird backtest an ATM? So yeah, just across the board, an ATM cannot be backtested at all. So that is a limitation of NinjaTrader itself, right? So NinjaTrader needs to build in the functionality so that their ATMs can be backtested, right? So yeah, that's just a across the board, no ATMs can be backtested yet. So I'm sure it's coming. Maybe NinjaTrader 9, they'll figure out a way to backtest their ATMs. So yeah. So
Hey, looks like we've got one more here from he said that you show fills at the open of the following bar. Can you discuss entering intra-bar when things trigger?
yeah, you cannot backtest intra-bar. So another good question. Yeah, not very good. I should have mentioned that on my PowerPoints. Yeah, you cannot backtest intra-bar. So because when your indicators are running on historical data, all your indicator sees here is, the close of the bar, right? So if you're running like an order flow indicator, yeah, so a good example would be the order flow indicator. These, again, that internal tick data that built this 1 minute bar, that is for the most part missing. There are ways around that. And let's see. All right. So I'm going to say, technically speaking, if you're a good programmer, you can write a custom strategy that is able to backtest. It can get close to backtesting as if it was running live, running on with the calculate set to on each tick. You would have to be a really good programmer because you're going to have to modify. You would basically have to create your own version of each indicator that you're using, so the indicators themselves can kind of run with this intra-bar resolution, but so realistically, the answer is no. It's just way too complicated. If you want to test intra-bar, if your system runs, intra-bar, and for the new people here, what we're talking about here, let's pull up the EMA here, a simple EMA, right? So all indicators have this calculate mode, right? So most indicators, they calculate only when the bar closes. But you can get your indicator to calculate on the bar that's forming, right? The bar that's building. You can get your EMA to calculate on that building bar, by setting the calculate to on each tick. So your indicator's calculating internally, on the building bar. And so that's what was being asked is, can you back test as if your calculate is set to on each tick? So technically, I think you could, but you're going to have to be a really good programmer, and NinjaTrader support's not going to help you with that. so realistically, no. The, again, your answer to back testing on each tick or on price change is you have to go back to the playback connection, right? You have to simulate as if you're running on live data to do that real-time back testing. So that back test connection, basically is Ninja's solution to, those couple of, technical, interbar kind of real-time type of back testing questions there. Yeah.
Excellent, man.
Yeah, those are some good detailed questions there. Man, I was kind of sweating bullets there. I wasn't sure if I was going to be able to answer them.
Getting grilled, man.
So, yeah, I'll pat myself on the back. So,
well, man, once again, thank you for joining us and sharing, man. I really appreciate it. Always enjoy having you here, man.
Thank you. Yeah, this was fun. And it's good
Audience,
to get that information out there because we do get those questions a lot. So
yeah,
it's good that this video is going to be out there and available for people. So we can just say, go watch that video. There you go.
Yeah. All righty, audience, thank you for hanging with us as well. Really appreciate it. Folks, that is going to be a wrap. I am pretty sure that we've covered just about everything we can here today. Don't forget to subscribe to our YouTube channel and hit those like buttons, please. Also follow us on Twitter at Futures.io. Again, I thank you for joining us. Trade like you mean it.
All right. Bye-bye, guys.